Hey everyone, welcome back to Corporate Decoder, the place where we pull back the curtain on corporate filings, and tonight it feels like we're digging into a treasure chest that might be a little bit empty. But let's see what we can find because this company is extending its loan and running a bit of a race against time to find a business to merge with. So what we've got here is a report from WinVest Accession Corp, a company that is basically in the business of acquiring another business. They're a special purpose acquisition company, or SPAC for short, which means they raise money from investors through an initial public offering or IPO with the sole purpose of finding and buying a private company. It is kind of like a blank check that investors give them, hoping they'll make a smart investment. This particular filing is a Form 8, which signals that something pretty important has happened that the public needs to know about. And in this case, it is all about extending the deadline for them to find that business to buy and a little bit about some money they've borrowed. Now, WinVest Accession Corp, let's keep an eye on them as in a bit of a time crunch. Their initial goal was to merge with another company by a certain date, but they haven't quite found the right match yet. So what do? They're extending that deadline. This means they're asking for more time to work with investors to find that perfect business to buy. This company is incorporated in Delaware, which is pretty common for many businesses. They've also got a file number with the SEC and an employer identification number. All standard stuff for a publicly traded company. And when we look at what kind of securities they offer, you'll see units, common stock, warrants, and rights. These are all different ways investors can participate in the company's future. Think of units as a bundle deal, common stock as owning a piece of the company, warrants as the right to buy stock later, and rights as a smaller invitation to buy stock. These are all traded on the OTC Markets Group. They are also flagging themselves as an emerging growth company. This means they get to follow some slightly different, often less strict rules from the CAC compared to bigger, more established companies. It is like a fast track lane for newer businesses. Now, let's get to the heart of this report. It is all about a financial obligation and specifically some money they borrowed. Back in September of last year, WinVest Accession Corp took out an unsecured promissory note for $180,000. This note is from their sponsor, which is essentially the people who helped start the SPAC. This promissory note doesn't have any interest, which is pretty unusual. It means they don't have to pay extra on top of the borrowed amount. It is due to be repaid either when they successfully merge with another company, or if the company goes out of business, better known as liquidation. The money can be taken out in chunks, $30,000 at a time. And here is where the extension comes in. On the 10th of January, they took out another $30,000. This money went into their trust account, which is a special account where the IPO money is held until they find a business to buy. Why did they do this? To extend their termination date, which is that deadline to find a merger. So instead of it being the 17th of January, it is now moved to the 17th of February. This gives them another month to get the deal done. It is important to understand what happens to this money in the trust account. If they don't find a business to buy, the money minus any expenses goes back to the shareholders who bought into the company during the IPO. If they do find a business and merge, then this money also goes back to those shareholders or is used in the merger process. This report is signed off by Manish Jongshanwala, who is holding down both the Chief Executive Officer and Chief Financial Officer roles. It is dated the 16th of January 2026, which is just a day after that extension on the termination date took effect. Now, looking at this from a bigger picture, WinVest Accession Corp is in a common SPAC situation. They've raised money but haven't yet found a target. The extension of the termination date is a standard move for SPACs that need more time. The fact that they're drawing down on this unsecured promissory note means they need to put more money into the trust account to fund this extension. What is interesting here is that the note doesn't bear interest. This is likely a gesture from the sponsor to give the SPAC more runway without incurring additional costs. However, the core challenge remains finding a suitable acquisition target. SPACs have a limited time window to do this, and if they fail, the company liquidates and the money in the trust account is returned to investors. For investors, this filing signals that the SPAC is still actively working towards a merger. The extension provides more time, but it also means the clock is ticking louder. The key risk here is the SPAC being unable to complete a business combination before the new deadline, which would lead to liquidation. The opportunity, of course, is if they find a solid company to merge with that can create value for shareholders. In conclusion, WinVest Accession Corp is trading time for a chance at a deal. The financial commitment for the extension is relatively small, but it highlights the pressures of the SPAC landscape. The real test will be what they announce in the coming months. Will they find that elusive acquisition, or will it be a return of capital to investors? Alright, that is our rundown of this filing. What is your take on SPACs and their extended deadlines? Do you think WinVest will find a gem? Let us know your thoughts in the comments below. If you found this breakdown helpful, Please give it a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and we'll see you in the next one.